Started my first startup in '97. The world told me I was insane.
Our goal is creating future economies that are more regenerative and sustainable.
Something didn't match up. Why hasn't this become the next big thing? And that's where we invested.
The whole purpose of achieving anything in life is measurement.
Hey everyone, I'm Manav, Senior Associate here at Shadow Ventures. Thank you for participating as part of Shadow Summit today on day 2. Have been having some great sessions. Looking forward to this upcoming session as well. Just some general housekeeping items. If you do have any questions for the panelists as we get rolling, please make sure to include them in your chat. It's either on the right side of your screen or on the bottom, depending on how it's configured for you. You can add them into the chat or into the Q&A session. And at the end of this panel, hopefully we'll have a little bit of time at the end where we'll be able to dive into them. So today's panel is capital that goes global. So really pretty conversational, but this session is primarily focused around rethinking labor, material zoning, and the entitlement process, and identifies new tech-based solutions that can take costs out and expedite the process. Today's experts will provide data on savings their solutions could provide that the audience could benefit from in the future and hopefully implement. So it looks like we have Jim on right now. So I will hand it off to Jim. Jim will be able to introduce himself, and then we should have some more panelists that are still connecting. They should be joining in just a moment. So without any further delay, Jim, I will hand it over to you.
Hey, thank you so much. You know, this virtual world that we're all in today, sometimes it works great. Other times, not so much. Personally, I'm looking forward to that day when we can all get back together at conferences in person, shaking hands and having a few drinks to celebrate. So keep your fingers crossed, 2022. For background, I'm a little bit different than the other panelists who are going to be joining us later. I'm an economist. My firm, we're Real Capital Analytics. We were just bought by MSCI, world's leading index provider for the investment community, helping people understand the performance of stocks and bonds and real estate investments. And so, I'm coming at this from a different direction than the other panelists. The other panelists really have their hands in the development of property and in the bricks and mortar. I'm looking at it at a high level, thinking about capital flows and about investment activity. So in a way, me being here first, it kind of lets us start from the top down, sort of, broad macro stories down to where the rubber meets the road in terms of how the assets function. And I in our organizing call, we filled more time in our organizing call than we have allotted here today for this event. Because personally, I found what they were talking about very interesting in terms of the productivity improvements that came from the tech that they were delivering. And because for me as an economist, when people talk about productivity, that's the holy grail. But I'll get into that in a bit. So I want to start just by talking about cross-border flows into real estate. We've got Don.
Here we are, technology.
Well, Don, I was just going to give a quick start to talk from the top down first about cross-border flows into commercial real estate and kind of paint a big picture. And then I was hoping that sometime towards the end of that, you guys would connect, but we got you connected. Jennifer was going to show a couple slides to do that first, but she's got a connectivity issue as well. So I thought maybe at the moment I might just finish that part on sort of the top down, and then we can get both of you in here to start talking about some of the productivity improvements that have come from just different processes that each of you have been applying. How's that sound to you?
Go for it.
Okay. So my firm, we're tracking investment activity worldwide on the commercial side of the industry. So we're not looking at the single family homes. I mean, it's an important and growing part for a lot of investors in that single family rental business, but we've never had the scale to be able to track every individual home sale. But the general flows of capital into these commercial property investments, the macro factors that are driving them will be the same as in cross-border flows into other sectors like single-family residential. You have some countries that they have a high savings rate. They don't have a lot of competitive assets at home. They don't have the population growth. That capital has to go someplace. Some of it's going into stocks, some of it's going into bonds, but the U.S. economy is still one of the largest, most liquid places in the world. And if you own some of the real estate here, you've got the box that the economy lives in. So that capital, despite some challenges, year in, year out, whatever hassles we're talking about in the world of politics or any kind of social challenges, still better here than many other parts of the world. So investors are looking for opportunities across many different asset classes here. Now, we've gone through this horrible time of the pandemic. We're not yet over with it, but it's looking like some of the worst might be coming to an end. And with that, there were a lot of folks that were worried that, pandemic, people can't travel, cross-border activity is going to fall. For the commercial world, it did fall, but didn't fall any more than any other type of investor. The year end of, the very start of 2020, cross-border capital was about 9% of total commercial real estate investment in the United States. And in the last quarter, it was 8%. It was a constant share, more or less, over the whole pandemic period, the worst of it. And really, the story was that, they couldn't do as much, but nobody else could either. Whether you are in Tokyo or in Abu Dhabi, you're still stuck in your couch, even if you're in Atlanta or Dallas or Tucson. So it was the same kind of impact for everybody. But also this notion that cross-border money couldn't buy because folks couldn't travel here. That's also a bit of a misnomer for what cross-border capital is these days. It's not the 1980s. It's not the period where deep-pocketed Japanese investors flew into a country, not really understanding what the assets were, buying something because it looked relatively cheap, and then walking away. A lot of these firms have pre-positioned people within the countries where they're investing and establishing local connections to be able to deploy capital. That's a Japanese story, as the guys here are going to talk about in a bit, but that's a story about many investors, folks in Germany, Korea, Canada. They've all got established local companies and established partners that help them deploy capital. So this whole notion that cross-border money would pull back because of the pandemic, that really fell by the wayside. It did fall back, but it only fell back in line with everything else. And at this point, it's not the problem that people feared it would be early on in the pandemic. But I see we have Joel now, but it shows, Joel, that you're muted. We can't hear you yet. It looks like you're muted there, Joel.
Hey guys, I'll work with Joel. If you want to continue the conversation, I can work with Joel here. Thanks so much, guys. Okay.
So that's a big top-down picture of cross-border activity in the United States across all commercial property. We did have a big event into a spike of cross-border investment into the United States around 2015. There was a period from 2013, 2014, 15 into around 17, where a lot of money from China came into the United States and bought aggressively for the first time. And they were doing things that cross-border investors often did not do in the United States. They were buying properties, especially trying to copy the condo development business that they had back in China over in the United States. They're buying up development sites left and right. I don't want to get into any of the current difficulties that are happening with some of the Chinese investors, but some of those folks had some missteps. And one common refrain that I hear from a number of folks in the business is that they didn't do what many other investors have done, which is develop good local partnerships and having people on the ground who understand the nuts and bolts of the local processes. One firm I know, they hired a director of capital raising. It was some kid, just out of grad school. Not that folks out of grad school aren't smart, but a U.S. firm, big investment firm doing a director of capital raising, that's a very different type of role here. You don't just go to the bank and ask for a check and they give it to you, because that's what banks do. They get into all sorts of questions about underwriting, what your other sources of equity are, and it's a much more professional job as opposed to just having a check delivered. Working with subcontractors, working with contractors, those are the kind of things where you need very good relationships with people to get stuff done. And if you're just coming in for the first time, you don't have those relationships, and it's going to be bumpy. And so some of those first movers into the United States, from that bump in activity into like 2015, some of them had some challenges along the way as they were learning that market for the first time. But that was atypical in a sense. Many of these investors that are coming here have been here for a long time, and they have already established these long-standing partnerships on the ground. You go back 40 years ago or so, and deal with like a German open-end fund. There was only a certain type of property that they would invest in because they only understood a few small areas of the United States, like Manhattan offices. But a number of them have established companies in the United States. A couple I know have put their headquarters in the United States in Florida, of all places, and are buying suburban office buildings, which in the past was anathema to these German investors because they only invested what they knew, and they didn't know suburban office because that's not a market in Germany. A similar story is investing in apartments. Everybody in the call today has at some point probably lived in an apartment. It's a common feature of the housing market in the United States. But in many parts of the world, there just isn't the same kind of rental housing market where it's professionally managed like you've got here. It's been developing as an asset class. It is up to around 15% of the investment market in Europe now, which is about where the United States was about 25 years ago. There's been an effort to kind of expand it as an asset class. But there was in the past a fear of investment groups to get involved in the ownership of rental housing out of fear of the reputational challenges and maybe throwing grandma out if she couldn't pay her rent. But they figured out how to deal with those issues, and people like that investment because it's a stable yield. But it took a long time of them being here to understand the asset class and start investing in stuff like that. But again, it really came down to having people on the ground and having those local connections and understanding local rules and practices where the capital started to change and get into these other asset classes. So it looks like we got Jennifer here now too.
Hello. Thank you for kicking us off, Jim.
Yeah.
Okay, so thanks again, Jim, and I want to introduce Don and Joel as well. Welcome, Joel. Please tell us about Oakwood Homes and your scope of building and your history with cross-border investors after Jim's strong introduction. And Joel, it looks like you're on mute.
Yeah, so Joel, he's going to be joining here momentarily. So if we could just get another couple minutes. Yeah, thanks so much.
Okay. Oh, yeah, no problem. And then Don, you started Bloomfield Homes in your garage, and Japanese investors found your company attractive. So can you tell us how and when they approached you and how you grew together to what you have today?
Yeah, so Bloomfield Homes started about 2004. I guess in the office or house, the garage of our first model home. 2012, we were up to about 400 houses a year. And we got kind of an unexpected call from Sumitomo Forestry Group saying they were looking to grow a U.S. presence, and they had picked Texas and picked Dallas, and with the help of a consultant had picked us. So we met with them and went to Japan, went through about a week of, I think they were figuring out if we were people they wanted to just spend time with. And then we really started talking business and were able to put a deal together in 2013. Since then, we've grown about fivefold. We'll do over 2,000 houses this year, close to $1 billion in sales. And I think they've also leveraged off of their experience with us to purchase Gehan, Dan Ryan Builders, or DRB, Edge Homes, Crescent Communities. So they've been able in, what's it been now, 8 years, to go from basically a startup to over 10,000 houses a year in the U.S.
Yeah, so actually, it's just one of several companies that are owned here in the U.S. So we have Daiwa House, Misawa, Sekisui, Sumitomo, who own Castle Rock, Stanley Martin, TrueMark, Impression, Woodside, Dan Ryan, Edge, Gehan, and Mainview. And that actually comes to about 8,586 closings in 2021. In 2020, that represented 16,000, above 16,000 closings, which is getting close to about 3% of the entire U.S. housing market. So, that's what Bloomfield represents. And it looks like we have Joel online now. Thanks for joining, Joel. I'm going to kick it off to you and hope to have you introduce yourself and talk about, if you could, Joel, tell us about Oakwood Homes, your scope of building, and your history with cross-border investors.
Happy to. Can you actually hear me now?
Yeah, sounds perfect. Looks good.
Great.
Sounds
spent the last 30 minutes struggling with IT issues here, which is not how I wanted to start off. So hello, everybody. Sorry about that. Joel Shine. I'm with Woodside Homes. We are a wholly owned division of Sekisui House out of Osaka, basically. And unfortunately, I did not hear anything that went on before me because I was busy struggling with IT. So Jennifer, if you want to tell me what you want me to talk about, I will do so.
Yeah, so you didn't miss much. We actually probably all were struggling a little bit with IT. And Jim spent a little bit of time reviewing cross-border investment. And then if you could just talk about Oakwood Homes, give us an overview of your organization and your history with having Japanese ownership.
I would be happy to talk about Oakwood Homes, except I think the gents who own that would probably find it inappropriate. So I'll go to Woodside Homes.
Oh,
sorry, couldn't resist. So Woodside's been around for a long time. I was brought in to take it over coming out of the great financial crisis of 2008. And we built the company up with private equity and then sold it to Sekisui about 4 years ago now. We're a 100% wholly owned subsidiary. It's not a joint venture. There's no earnouts or anything like that. So we're an operating subsidiary. We build in the Western U.S. We'll build just shy of 3,000 houses this year. And it's been very interesting. I have a little, I don't know, I guess it's an advantage in that I had actually lived in Japan for a summer when I was younger. And when I was an investment banker, did about 8 or 9 deals representing Japanese trading companies. So I was pretty familiar with the culture. But for those who are not, it takes some doing. It's a different part of the world, different set of expectations. They're very smart folks. The way they run their business there is substantially more advanced than a lot of what we do in terms of technology and research and construction methodology. And so there's a lot for us to learn from them, and maybe a little bit maybe a few things that they can learn from us.
Yeah, absolutely. I love the stories from you and Don about, the cultural differences and, learning and the learning curve. It's so interesting. Jim, I know you've already talked a little bit, but you come from outside the housing industry and you are seeing cross-border investment on a much larger scale. What countries historically have invested the most in commercial real estate, and where do you see that trending?
Yeah, I mean, earlier I talked a little bit about this. I highlighted, some names of countries. a lot of times when people talk about, oh, cross-border money coming to the United States, they think of the example of the 1980s. A lot of Japanese money coming in for the first time. That was a bit of an aberration. We also had, in some sense, a bit of an aberration in Chinese money around 2015 or so. But then, in other periods, you've had countries that just save a lot of capital. They just have a lot of thrifty people, and they're small and wealthy, and that capital has to go someplace. And so U.S. real estate of all scales are an important place for these folks to buy real estate. It's a way for them to own a part of the United States economy. They own the box in which the economy lives. And so, that's going to be places like Canada, small country, in terms of population, big country in terms of size, but, it's the population that matters. Canada, Singapore, Korea, Germany, Israel, and Japan again. Japanese investors, as Don and Joel can attest to, they're back across all segments of property, single family and the commercial side, in a much better way than their counterparts in the 1980s who came in highly leveraged against the assets that they owned back home. It's a very different type of investment that they're doing today. And they have to, because there's a growth opportunity here in the United States. And there's a need that they have for yield to pay for all their retirement needs. And so the kind of growth we have in the United States looks very attractive for those folks. That's really the goal for a lot of these investors. We have some growth in the United States. They can buy some assets here and tap into that growth.
Yeah, so I'd also like to know, Jim, what investors are looking for today. So Joel and Don are both working with growing Japanese property companies. Can you please talk about where Japanese investors are going today, what they're looking for?
Yeah, the investors, what they're really looking for is something that's better than a bond. When you're making a decision to pick up and invest outside of your home country, it's a risk. You're moving capital someplace else. Why are you going to take that on? You're going to take that on because you get some scale there. You get access to areas outside of your home. And some of these markets, the rates of return are just so darn low that for all the obligations they have to pay for retirements and to handle different insurance claims and all the other reasons that capital is accumulated, they just can't get it in their home market. So, investing in real estate in the United States, whether it's commercial, single family, it delivers a yield, and that's what's of interest to them. They want that stable yield so that they can meet all their obligations. And what in the United States might seem like a pretty weak yield looks really attractive to them. And so that need is driving some of the capital over here.
Yeah, for sure. So I know this is really fresh, but do you think there's any implications from Evergrande in China? How are you tracking that situation?
There's a lot that I think the unknowns around Evergrande are more important than the knowns. The unknown unknowns is really what get you in a crisis like this. Like in the global financial crisis, I remember back in 2005 at when I was with CBRE at our annual research conference, we put in front of a room of investors a chart showing that we thought we'd hit a recession in 2008 because of all the subprime coming due. But we thought it'd be minor, only around 300 billion in losses. We'd be able to eat through it without much problem. We didn't know about the derivatives market. So, that unknown is really where the problem was. One developer in China, the challenge is, what kind of contagion goes into other places? But I think the important thing to take away from what Evergrande is going through is that it's not indicative of every cross-border investor. You have, one company that was in China, a very fast-growing, high leverage kind of situation, trying to bring that country into modernity. When you go back 40 years ago, China was relatively not relatively, it was underdeveloped. And you go there now, frankly, much of China looks more advanced than parts of the United States. When you're in Shanghai and Beijing, to go from Beijing to Shanghai, it took the train, it's 4 hours. That's like taking a train from New York to Chicago in 4 hours. I mean, it's a developed country now. But we saw that kind of stuff here in the United States in the 1980s. We built a lot of stuff quickly, and sometimes you overshoot, and then there's a reckoning. The challenge is going to be, how does that reckoning settle out? Nobody really knows yet. Will it be contained to one company, one area? Is it going to have a follow-on contagion to other problems? It's the unknowns. Nobody knows sort of the level of debt outside of the country, and that's where the problems could really come. But that's one developer. It's not all cross-border activity that was like that, and certainly not Japanese investors. They learned a lesson in the 1980s, and that memory holds strong.
Yeah.
The other thing, Jennifer, that I might add is since our title is working with overseas capital partners, it struck me, if I was going to ask what should I know before I work with an overseas capital partner, I think that a lot of people make the mistake of going to a meeting with somebody from Beijing or Tokyo with really no different expectations than if it were somebody from New York or Chicago. And that is wildly wrong and will not work very well. Don and I were laughing just some of the cultural examples, but telegraphing to the other side that you're sensitive to the cultural issues that they bring and to the way they want to do business. What's the old golden rule, right? He who has the gold makes the rules. And so if you're going to do business with a Japanese investor, for example, make sure the team that's going understands how to set up a table, who sits where, the importance of just being on time. I mean, you come 10 minutes late for a meeting in Tokyo, people look like you walked in naked. There's a pretty long list, but there are lots of people who really do know it. And I would say it has served us very well, and it has helped the relationship between Woodside and SHL, that we took the little extra time to make sure everybody understood the cultural differences before we went into any of these meetings.
Oh, it's huge. And you said walking in naked, and I know that in our call, you and Don both talked a lot about attire and how important attire is. But one thing that really stood out to me when we were talking before was that you said that Sekisui probably does more R&D in that one company alone than all of the U.S. builders put together. Can you share more about what they're doing and how they're advancing?
Yeah, I'll be a little circumspect because frankly, they don't like to share what they're doing. But I can tell you, SHL has a research facility in Tokyo. It's probably 250,000 square feet with dozens of folks who have all sorts of alphabet soup after their names, i.e. PhD this, PhD that, masters of that. And I'll tell you, they build homes that are largely earthquake proof. And I actually sat in 2 different dining rooms on 2 different earthquake simulation shake tables. They have 2 of them. I'm guessing, I don't know anybody has 2 of them except maybe JPL in the US. And they build rooms on these shake tables and synthesize earthquakes and test them for earthquake readiness in their own R&D facility. I've seen them build an entire house in a rather cavernous room and then expose the house to various elements and test for the actual R ratings of various insulation materials, rather than simply taking the word of the manufacturer. And so it's just a whole different level, and stipulated there to a much larger scale than all but the very biggest of the U.S. home builders. But there's they just think about it differently. I mean, I don't know how else to say it. Most home builders, we really are home builders. We're relatively, and I speak for myself, we're relatively simple operators. We don't have a bunch of guys with PhDs testing materials. We buy materials from our suppliers. They tell us the windows and R whatever, and we take that for granted. The inspectors take it for granted, and we all move on. They actually test it to see what it really is and make sure and see how it works in the connections. And as a result of that type of science, they have stuff that nobody else has. And so it makes it very interesting, and we will see how all of that plays out in the U.S. markets.
Yeah, they've dealt with they've dealt with higher energy costs for a long, long time. So they're forced to be more efficient, to really understand it, to do it in depth. And I think Joel's talking, they look at how the whole house works together, whereas U.S. builders, we tend to look at the components, and the manufacturers do the research, and they come, if we get a change in the building code and we got to hit a new level, every manufacturer's got a solution. They bring their solutions. There's different products to achieve it, whether it's insulation, windows, some kind of caulking or whatever. And we look at all those different possibilities and usually, pick the most cost effective, as opposed to really doing the testing on the building itself. So same thing with Sumitomo Forestry. They have a whole research institute, large staff, as Joel said, testing the product. And they're also testing not just the mechanics of the product, but also the aesthetics of, noise and light and, scale, which is real important because they're building much smaller houses than we are here. And I would see the U.S. as, costs continue to rise. There's an evolution towards potentially smaller square footage, whereas we've been trending up for a number of years now. So those are things that they've worked on for a long time. And I think we have a lot of respect for it right now. We haven't implemented that much of it. It makes us think about it, but I can't point to any one thing and say, well, we brought that into the U.S.
Why can't it be implemented in the U.S.? Like, why isn't that type of R&D or that innovation being adopted here?
Yeah, maybe I'm misspeaking in some cases. I mean, you have Daikin, who's probably the biggest, air conditioning manufacturer in the world. We've got, one of the Sumitomo Forestry is on their board. So, we use their equipment. So, there is some of that technology, I think, is finding its way into U.S. homes, but it's not coming directly into the builder yet. Part of it is economics. If our energy is cheap, we don't get the same payback off of the energy efficiency that you might in Japan. If our land and our materials are far less expensive than they are there, there's not the pressure to learn how to design, modular kitchens, bathrooms, and those kind of things. Although, we're certainly talking about it a lot, and we're seeing it more. But I'm guessing Joel hasn't installed a single unit modular kitchen or bathroom in one of his houses, but we've both seen them over there, and they look really good.
But I think this is a mistake that's easy to make. The best example I can give you is the Tokyo Yokohama SMSA, which is basically one big expansive city, has essentially the same population as the state of California, right? And so you're talking about a different level of density. And also you're talking about a much smaller home that sells for more money, and typically it's selling for more money without the land baked into it. So if you extrapolated it out, their sort of residual value per square foot of a living space looks much higher than most of the places Don and I build, like by orders of magnitude, which allows you to do different things. And I also think, to be fair, the Sumitomo, Daiwa, Sekisui entrance into the US, it's still pretty young, right? None of these are 20-year-old deals. And so I think over time, you'll see Don and I rolling out things that we pick up from our parent companies in Japan, but it does take time. And remember, when I bring something in from Japan, the building inspectors here have no idea what it is. So it's you have to go through a process to educate the local authorities as to what the heck it is you're doing.
No doubt. Yeah. And so they have different policy, regulation, everything. Jim, did you have something to add?
Yeah, I have a question, actually. I want to put to the guys. It struck me, and we didn't talk about this in the organizing call, but when I think about the Japanese economy, one difference between Japan and the United States is that the population has been aging much faster than the United States. And so labor is harder to find in certain trades. And so I can imagine all that research is also them trying to find ways of being more productive in terms of being able to build things faster with fewer people. In the United States today, it's hard to find good workers in some industries. I imagine you guys are facing the same challenges in construction. Are you getting some of that from the Japanese tech? Is that a function that's coming through?
Yeah,
So-
I think you hit it. I mean, it makes more sense for them to build in factories with robots where they can build components. And then also, you're building these houses. I mean, there's a huge number of very small single family detached homes being built in Tokyo, which I never would have expected before going there. A 4-story house at 1,600 square feet on a lot that's 600 square feet. But they do use, I mean, you could use a crane and get it in place. I mean, you're not going to see, other than maybe putting shingles or sheetrock up one day, you don't see cranes on our jobs. It's a different, the economics are just different. But I do think, what you bring up about our aging labor force, especially in the mechanical trades, is a reality, and that is going to lead to some changes, I think.
Yeah, I totally agree. I think as labor gets older, scarcer, and more expensive, the price of automation begins to get more and more rational. And I've done a bunch of these panels with guys saying, you all are crazy. Why are you building houses on the job site and not in factories? They're much better built in factories. And there's an argument there. However, the flip side of that argument is that we are in an industry that has been wildly cyclical for as long as I've been doing it, and probably a lot longer. And the one thing that nobody mentions about our supposedly antiquated system of site building is that it does a spectacular job of eliminating fixed costs and converting them to variable and allowing you to scale up and scale down.
Yeah.
If you're building in a factory and everybody is on payroll and you're paying them full time to run the factory, that there's a minimum below which you can't go. And so now you're stuck with these big fixed costs hanging around your neck like a millstone in the first downturn.
Yeah, I think that's really important. And one of the things you look at Japan is because they are vertically integrated, and there's a lot of engineered wood and a lot of factories, and the building companies are vertically integrated into that. So there is a huge incentive and really almost a requirement to keep those factories busy. And what that leads to is very low margin home building. And these are public companies, and you can go look at their numbers. And home building is not, I mean, I think home building is relatively low margin in the US. It's even more difficult there. And I think part of that is because of the necessity to keep all these fixed costs busy.
Can you just quantify that a little bit more, Don? Like, what do you mean? What are the expected returns there versus what we expect here?
Well, you might see huge companies working on 1 or 2% bottom line.
Yeah.
Which is partly why you have the low cost of capital there, is because they get low returns there. So you've got companies that have hurdle rates in the high single digits, which we just continue to use the hurdle rates that we used when we were running public building companies in the US, because we know that's what we should be able to get out of our industry. But the returns are much, much lower. Whereas,
right.
Yeah, the analysis I used once when I was sort of comparing how we operate here to how they operate in Japan, I said at the end of the process, we both end up with a single family home, and that's the only thing the processes have in common.
So Joel, you mentioned that that perspective on returns is tied into their long-term view, and there's a pretty big difference between what we think of as long-term in the US versus what they think of as long-term. Can you just explain that, what the differences are?
Yeah, I mean, my running joke is in most US companies, your short, medium, and long-term forecast is this week, this month, this quarter. And in Japan, short, medium, and long-term is 3 years, 5 years, 20 years. And so, it's interesting, and they're very intelligent forecasters, and they understand that looking out 20 years is by definition more aspirational, but it does allow you to take some time and make, frankly, I think it leads to better decisions. I mean, when I was a banker working with a lot of public home builders, and Don's going to agree with this, I mean, you're looking at 5-year projects, and then in the middle of it, you're going to have to make decisions based on 90 days of earnings. And it's a silly mismatch of timeframes. Home building is inherently a long-term strategy, right? I mean, unless you're buying finished lots in a master plan and building homes on them in 10 and 20 unit increments, Our typical deals are, 2, 3, 5 years. And so to not be thinking in 5 and 10 year horizons, I think you do the process a disservice. So I actually think their way is better. And I suspect that if you rounded up a bunch of public home building CEOs and asked them how appropriate they thought it was to be held accountable quarterly for results, you get some interesting answers.
Yeah, I think one thing I really learned that I'd never thought of before, and I 100% agree with it, is you typically look at the U.S. like buying land is all about how quick can I get my cash out and how quick can I get an IRR. And a lot of times you leave profit on the table in order to create shorter term IRR. In Japan, they look at, with like our land investment, is how much future profit do you control? Is this in a market that's going to be viable long term? Is it desirable land? Do you have entitlements? Are you going to be able to actually deliver it someday? You got to definitely do all that due diligence. But the assumption is that if you're in a city like Dallas, where you expect the population to continue to grow for the next 10 or 20 years, you expect to realize that profit someday. So you measure your investments in how much future profit you control, with less emphasis on whether I'm going to get my RR for the next quarter. And that lets you make, I think, some fabulous long-term business decisions as far as land acquisition.
Yeah, I remember one of my old investors looking at me when we were analyzing a deal back when I was a banker, and he said, "Yep, every Friday night you get home and my wife looks at me and goes, 'I want to go out to dinner. Can I have some IRR?'" At the end of the day, it does need to come down to how much money does the business generate, because IRR is more impacted by relatively small timing changes than it is by how well you're doing.
Yeah, that's interesting. And you also mentioned that the CEOs that are much more long term. They're at the company for a long time, right? And that's a sort of a difference. And their reputation is very much integrated into the company. Is that correct, Joel?
Lifetime employment definitely still exists there. Yeah. And because you're going for this lifetime employment, your first job is so important to you, which leads to you got to be in the right university, you got to get the right grades, you got to be in the right high school to get into the right university, you got to be in the right elementary school to get into the right high school. So it leads to this, some of it is a real pressure to do the right thing the whole step of the way and not make a mistake, because it's difficult to recover from a mistake career-wise. But it does give you a little bit. So to that part, I think is a little bit of a negative, because you're risk adverse. And I think one thing they probably find admirable about Joel and myself is kind of our entrepreneurial spirit, our willingness to go put goals out there that we probably can't meet, that are aspirational, as Joel said, and to go for it. And the CEOs love that. It scares the staff people to death, because whoever's associated with us, if we don't meet that goal, it's a drag for them, right? So it's a little different. One thing to remember, though, is these companies, they plan to be around another 100 years or more. So these CEOs are managing this company's legacy, its reputation, its financial strength, its future growth. So they're very aware of that. It's not U.S. is, why if I can hit my numbers the next 2 quarters, I can go get a job with somebody else, and then I'll try to do the same thing.
Yeah, I think the employment for life concept is still very much alive there. And I think it does impact the way you make decisions, and it impacts the way they run their companies. And again, to the title of it, if you're working with them, you just need to keep that in mind and understand what their motivations are, right? I mean, the key to, in my opinion, the key to being a good capital partner on the receiving end is to spend a lot more time trying to understand what's important to the person putting up the money than you're spending trying to convince them to do things your way. And so to all the points that Don has made and that James has made, I mean, these are, you really want to do your homework and understand. It doesn't matter if it's Japan or China or Europe or anybody else, understand where they come from, understand what types of hurdles they're looking against, and understand what they're really afraid of.
Yeah. So that leads right into Jim. And this will be our last question before we go into the speed round. But how purpose-driven are other countries when they enter the U.S. in search of good investments? And what are you seeing? Who are you seeing entering, and what are they looking for?
Yeah, most of the time when I'm looking at these investors come to the United States, it's coming in where they're investing in properties, not in companies. They're not doing the data I see. I know there are cases where they are investing in companies. I mean, Don and Joel are a great example of that. But it's the data my company sees. We see them investing in the properties. And when they're doing that, it's a very cautious type of investor. It's a German investor that wants to get a little bit better than a bond. So they're buying the types of properties where there's a stable cash flow in place, predictable tenancies. The capital generally, though, when it's coming over, it's that sovereign wealth type money. Some potentate in the Middle East with a bunch of capital from oil they pulled out of the ground. They got to put it someplace. And so they need that stable yield that comes from it. It's the pension systems in other countries. That's where most of that money's coming from. It's not the casual everyday guy just buying a building in another country just because. It's many billions of dollars at once moving around. And so it tends to be folks looking for kind of lower returns anyway, just something stable for the most part.
Yeah, and I would point out, for as much as all of us love to criticize our government and our political establishment, and the left rags on the right rags on the left, whatever, compared to most places in the world, we're still a beacon of economic stability, and we're still the place where you want to park your wealth. And, when foreign companies come here, they are adding to the risk profile exchange risk, they're adding potential changes in international taxation risk. I never thought I'd be reading the Japan-U.S. tax treaty as looking at our tax planning, but we have guys in our office who have to do that. You're not going to take all that extra risk and all the extra hassle of time differences and travel and the rest unless there's a pot of gold at the end of that rainbow. It's not worth the hassle otherwise.
Right.
Yeah.
All right, so let's do a little speed round. I want you guys to answer in a single word or phrase, and we'll just kind of go in the same order each time, starting with Don, then Joel, and then Jim is going to have a much different perspective, as you guys have all heard. So in dealing with a new culture, how long does learning curve last? Don?
Forever.
Forever, and only slightly contracted by how much time you spend studying in advance.
Right.
Ditto.
Okay. Don, what can you say about risk tolerance?
I'm not sure they always understand the risk they're taking.
I would say that frequently, and this is an issue, because they're so far removed, it wouldn't be the first time that the wrong risk was the risk that was focused on.
Yeah.
Low.
Low?
For the folks I'm working with, yeah.
Okay. So, Don, comparison of credit ratings.
Their credit rate, Japanese credit ratings are better than U.S. credit ratings. The companies.
Way better.
I have nothing to compare there.
Okay. Don, how they operate there versus how we operate here.
They're cautious. We're entrepreneurial.
Committee-based versus individuals.
It's the same. For my world, whether you're CalSTRS, CalPERS, or NPS, it's the same sort of institutional bureaucratic decision-making process. So it's interesting, in that element, it's the same, whether you're in a boardroom in Abu Dhabi or Jeonju.
Awesome. Don, how about tolerance for U.S. culture?
Very high.
For U.S. what?
Culture?
Quite high, to a point.
Love it.
They love our culture.
There's many meetings I've had where suddenly the meeting becomes, oh, well, we'll just send our team over to the United States to visit you instead.
Yeah. So, Don, what was the most surprising cultural conflict?
High doesn't mean yes. High meaning HAI, which is the Japanese word for yes, or we're told it's the Japanese word for yes.
It's a different, I guess, whole definition of yes.
Correct.
Yeah. Joel?
When they say yes to you, all that means is I've heard you. Doesn't mean anything more.
Right.
Surprising. I would say, and I know this is an odd one, it's not unusual in a meeting with business people from Japan for the room to go dead silent while they think of the right thing to say. And it's interesting to watch how uncomfortable most Americans are with a room being dead silent for 30 seconds.
Right. It is uncomfortable. It just feels awkward to us, right? Jim?
I have a very hard time with this one. Just thinking about every country, it's a very different mentality of folks I'm dealing with. Highly mathematical stuff is very important to a number of German investors that Japanese investors may not look at as closely. That folks in the Middle East aren't going to sometimes look at at all. So just the variety of approaches. It's the same boardrooms in some cases and same kind of general goals that people have, but the minutia of stuff that people look at is going to vary. Just slightly different cultures in every place.
Sure, that makes sense. So last speed round, and then we have one question from the audience. So cross-border property management growth, Don?
I guess I'm not aware.
We just do for sale, so cross-border property management wouldn't be in our not in our ball field.
Yeah, personally, I just don't know how a lot of firms would do that. They know in the commercial world, the big real estate services companies like CBRE that I used to be part of, JLL, there's a number of these big global companies that manage properties for investors. But it's the one company, but what happens at the local level matters. If you don't understand the local rules around how trash delivery comes through, and you try operating, using some management team you're parachuting in from some other country, you're going to have a bad time. So it's really the case of you can be a global company, but you really have to bring people from different cultures together in one vision.
Yeah, thank you, Jim. So the question from the audience is, are there any hacks to figuring out tax implications or other regulatory capture?
No.
No hacks.
You just gotta find the right consultants and pay them and let them figure it out for you. I've not that I know of.
Bummer. That was my question. I was hoping that there was something you were going to point me to, Joel.
Well, I do think, like we use EY, for instance, does the accounting globally. And I think Sumitomo operates some like 27 different countries. So you've got firms that do understand, I guess, a world perspective on taxes, which honestly, I don't. I'm fortunate to be in the state of Texas where we don't even have much state tax. So we're pretty unaware, but we're really relying on the international CPA firm to lead us in the right direction.
Yeah, that's the right answer. E&Y and KPMG both have good Japanese presence, so either one of those would be fine. And I'm sure there are others.
And sorry, Jennifer, there was one more question. It looks like in the Q&A. Do international capital partners expect U.S. companies to adopt their norms, or is it just vital to understand the differences so when working with them, you can best position your needs and differences?
I think that gets a resounding "it depends."
Yeah.
Okay.
I think it depends not only on the company, but on the individual. So the cultural norms are very much a personal thing. To Don's point, some people come here from other parts of the world and feel liberated by our business casual atmosphere, and some people come here and find it terribly awkward. So unfortunately, I think that for me, that would be it depends.
All right.
Well, thank you, you guys. It was so fun to chat with you all today, and thanks, Manav, for hosting us. It's been fun.
Yeah, no, thank you, everyone. We appreciate all of you making time today to participate as part of Summit. Hopefully everyone got a lot of value out of this presentation. So I know that we had some IT hiccups at the beginning, but thank you for everyone working through them and getting this set up. So we really appreciate your time. Thank you so much.
No problem. Thanks, everybody. Thanks, Jennifer, Don, James.
Stay well.